Hey everybody, welcome back for another daily recap. Today we'll be going over Monday, August 5th's trading session. Pretty interesting one today, especially if you're an mini S&P trader. So a lot of downside movement today. We'll be going over that in a bit. But for now, we'll start off with the crude oil daily chart like we always do. And so this bearish candle right here is Monday's trading action. As you can see, didn't have much range. We're still stuck in the support and resistance flip zone here. Like I said on Friday, I wanted to see a breakdown below it today and then maybe take out these lows here, but we just didn't have enough sellers to achieve that today. Still hate the way that these moving averages are just right on top of each other like this. You know, it's just signifying a lot more consolidation. I want to see those expand, and hopefully we see a move out of this range soon. As you can see even here, it's actually a little over midnight. It's 12:35 a.m. here. So we're still in this little support and resistance zone here. I want to see a break out of this today. I don't want to be chopping around in this wedge any longer. I want to see some expansion. But usually when we see consolidations like this, we'll see some big moves coming. So that's something to look forward to. Promise we won't be here for long, or at least I hope not. So let's go into the mini S&P now. As you can see here, massive drop today. If you recall what I said on Friday, I said that if we break down below this 50-day, then we're probably going to test the 200. Now, I did not expect this to happen in one day, essentially, which is what we got, but we did touch this 200. Now, this is something to definitely keep in mind over the next few days or this week. We'll see where we go from here. As you can see right now in the overnight, we had a pretty good bounce off of it. We'll see how we react to it tomorrow morning. But as of right now, very volatile market. This is heavily focused on the China trade tensions. So usually when markets are this focused on fundamentals, I like to stay out of them. But we'll see tomorrow morning if there are any trading opportunities. I want to see where we are in relation to the overnight volume profile, yesterday's volume profile. So we'll see. I didn't take any trades today on this pair, but I did take two crude oil trades. So let's drop down into that. Okay, so this is the 5-minute chart for crude oil. This is Monday's trading session here. The overnight is right here, and then Friday's trading session is right here, the volume profile for that. So, like I said, I took two trades in this. Did take my first loss since starting these daily recaps, as you can see right here. I'll go over that in a bit. I'll walk you through why I took it. So let's zoom out a little bit. As you can see here, this is the volume profile for last week. And so, like always on Mondays, what I like to do is see where we are in relation to last week's value area. As you can see, we opened here, which is below the value area of last week, which is good because we do have a bearish sentiment in this pair. As you can see, start immediately break down lower. Okay, so as I said, I am looking for shorts here. Ideally, what I want to see is a rally up, a pullback to this value area. This is Friday's trading volume profile. So I wanted to see a rally up into this and then start seeing some selling pressure, a fail to go any higher, any signs of that. So as you can see on this first trade that I took here, rallied up. I'll walk you through why I took this. So let's go back a little bit. So this is the value area low right here. Once we saw this big candle go up and I saw this long wick, a nice rejection, I entered on this after this bearish candle here. We had strong momentum. I thought it was a pretty good trade to take. So I entered on this candle here and immediately got stopped out. The next candle blew right to my stop loss, which is fine. Completely okay. We have to expect losses here. Looking back on it now, it may have been beneficial to maybe see a break of this first. Right here, this line right here. Just some added confirmation. But since I was so bearish on on crude oil, I was okay with taking that trade just based off this wick here. So, but like I said, we got stopped out almost immediately, which is okay. So continuing on, I'm still looking for shorts. Ideally, what I want to see now is if we are to break into this value area, I don't want to see it go any higher than this level here, which is 55.75. So 55.75 is a support and resistance level, but it's also the value area low for last week. I do not want to see a break above it. I don't want to see us chop around in this value area here. I want to see some sort of rejection and then a willingness to go lower, some selling pressure. So after I got stopped out, I was still looking to enter short. Now what I'm looking for is a pullback into this zone and then a breakdown below this value area low. So again, a break up, a push up into this, and then a breakdown below this value area low. So let's go candle by candle. So this last candle you see here, this green one, is where we got stopped out. I continued watching. We chopped sideways for a little bit, and we broke up into this level here, into this zone. So we're in value area now. And as I said, I wanted to see a break below it. But keep in mind what I said about this line. I want to see also a break in market structure here. I want to see some basic trend lines, support and resistance level breaks, because now that I see that we're chopping around, I want that added confirmation. So I did not enter on this candle here because, as you can see, I started to draw this intraday, this little level this little trend line right here. I drew it intraday, and I wanted to see a breakdown below it just to show, again, just some added confirmation that we're going lower. So as you can see here, broke down below it, but then we entered again up into this zone here. This is still my selling zone. As we go down lower, we see this big bearish candle, a lot of momentum, and a break of this little trend line that I drew intraday. So I entered on the candle next to it, as you can see here. Entered immediately next to it, had my stop loss right above that candle, about 20 ticks, and then we take profit of 41. So we hit it, and then we kind of just chopped around for the rest of the day. Even this take profit was kind of messy. It was a pretty choppy day overall. As you can see, we opened here at 54.79, and then we closed at 54.63. So, pretty sideways day, but we did make up for a loss. And so now that we finally took our loss, I can start going over risk management a little bit. So yeah, I don't believe I've gone over this with you guys yet, but essentially what I do on every trade is I'll take a trade based on how much percent of my account that I'm willing to risk. So when you see that when I talk about that I have a 25 tick stop, that does not mean that I'm doing it strictly off contracts and tick levels. So, okay, let me try to clear this up. Don't want to be confusing. I risk 2% of my account per trade. So what I do is I use a handy indicator. I have it pulled up here. I'll show you guys. Not affiliated with this company at all. This is just what I use. So basically, it's a position tool that you can use with NinjaTrader. Costs $99, which is very cheap for what it is. Basically, what it does is it helps you calculate the risk that you're taking per trade, and it'll tell you the contract side needed to take that risk. Very easy to use. Like I said, you input your risk. I risk 2% per trade, so I'll have that as my risk tolerance. It'll show me where the stop. I'll manually input where I want my stop to be. So let's go back into that chart. I'll say that I want my stop to be above this candle. It'll calculate the position size I need to take to risk 2%. And then in turn, it'll take my 4% profit. So when I show you these levels, don't be like, oh, he's risking 20 ticks here, but he's risking 25 ticks here. I'm risking 2% per trade every single trade. So in the case of today, I lost 2% on my first trade, and then on my second trade, I made 4%. Keep in mind, because remember, we take 2 to 1 risk reward on every single trade. So lost 2% here, made 4% here. So the net on the day is plus 2%. Always keep that in mind. Risk management is vital in these markets. There are very few things that we can control. What we risk per trade is one thing that we can. So use that to your advantage. I've heard a lot of people say that risk management isn't an edge. I highly disagree. As I said, you can't control where the market's going, but you can control how much you're going to lose. Use it to your advantage, guys. Even if you don't want to buy this, completely understand. If you can do those calculations quickly, go for it. I can't. I like having that tool, that indicator. So I guess it's not an indicator. I don't know what you would call it, a script or whatever. But it's very useful. I use it every single day, or when I take trades at least, and it's very helpful. Like I said, risk management, key, guys. Very key. So we netted plus 2% on today. And that was pretty much the extent of the crude oil trade. Let's look at where we are now. So like I said, right now it's 12:45 a.m. So we saw a breakdown below and a head up higher. Don't like to see this, especially looking for shorts, because now we're breaking into Monday's value area. So let's see if we break into the value area of last week. If we do, neutral on this pair, whatever the market gives us, we'll take. If we see some rejection here overnight going into tomorrow, then we'll go short again. But like I said, I'm neutral on this pair at the moment. We didn't see the breakdown that I wanted to see. Even when we broke down lower, we went right back up. So I might see some choppiness. We'll see heading into tomorrow. Now let's go into the mini S&P intraday chart. So this is the 5-minute chart. This was Monday's trading session. This is the overnight. This is Friday's trading session here. And then I have last week's as well. So just like with crude oil, I like to see where we are when we open on Monday's RTH session, where we are in relation to last week's volume profile. So we're well below the value area low, well below it, and also well below the value area for Friday's trading session. Like I said earlier, this market is heavily influenced by the fundamentals at the moment, China trade war tensions. So we did see just a slow, moving day lower. I didn't, it's tough for me to take psychologically for me to take trades here because there weren't really any pullbacks. I guess intraday, if you did want to take a short, do something like this. Draw out a support line, a break of it, go short. You would have made good money on this candle right here. Enter after, headed lower for the rest of the day. Did see a little bit of a bounce here, but ultimately lower. And then heading into the overnight where we are today, very similar to crude oil, if you noticed. Break down lower, rise up. So with this pair, it's tough. Like I said, let's go back to that daily chart actually. Here we are here. We're bouncing off this 200 day. Interested to see where it takes us. Don't want to say I'm neutral on it, just because we have been heading lower. I don't know how much lower we can go. Usually when we touch the 200, as you can see here, we did touch it pretty recently. Broke down below it and then broke up. Maybe if we start showing some buying pressure, head upwards, but I don't know. We're in between the 50 and 200. We'll see where it goes from there. But all right, guys, I think that'll do it for today. I'll see you guys tomorrow for Tuesday's daily recap. Thank you.